Hi, this is Kirk with Forex Strategies and Secrets. I'm going to be talking about how to cut your learning curve by years, not just months. We're not just shaving off a few months of learning curve, but years ahead of where you normally would have been have you not grasped these concepts we're going to be sharing with you. So we'll also be sharing with you how to get 1 year of experience in 30 days, or you can get 1 year of experience in 3 years, or 4 or 5 or 7 years. That's normally what happens. People they put in a year, get some knowledge, and they keep on repeating and repeating and trying and starting and stopping and not being able to make progress. And so it takes many years to progress. But we want you to keep on progressing after you get that 1 year experience in 30 days. Then we're suggesting that it's possible to get maybe 2 years experience in 45 days once you know how to get that experience and get exposed to the market. So we're going to go to some charts right now and show you what we're talking about. On this chart, we're seeing what we call impulsive and corrective moves. It's a 4-hour chart, and you see impulsive here and a corrective. Impulsive, corrective, impulsive, corrective. The corrective sometimes will retrace, sometimes the corrective just kind of goes sideways. But look down below here. We're seeing impulsive, corrective, impulsive, corrective, impulsive, corrective. So the indicators we use are sharing with you the surge in the market, what's taking place. And that in itself, understanding that concept should greatly increase your understanding of the market. Now I'm going to go back a little bit in time and look at this. Okay, that was the first section. Now here's another section. We're seeing impulsive, corrective, impulsive, so forth. And they don't all look the same, but you're seeing that it's the same type of situation. And right here, there's another thing that tells us when the move or the trend is coming to an end. On this 4-hour chart, it's right here. So I'm going to mark the price bars. They're going down, and the momentum is going up. So right here, it told us that that move was over as far as continuing down without a retracement or a correction. So what we're seeing is we call it CDC, or convergence, divergence, and congruence. At that point, it says it was going to retrace or consolidate. And we see it retrace. Now, I'm going to zoom out and see what the big picture is. Look here. It was going down, it retraced, and it continued on down. And you can see back over here, it was going down, it retraced, and then it went down over here. So you see that the market moves in these patterns. And so if you get used to seeing that and understanding that, then you'll be way ahead of the game. So there's also support and resistance areas. You notice that these little marks here, they're called fractals. They're marking support and resistance levels. So as the market many times comes down, retraces, when it passes these fractals, then that's a strong impulsive move down. This one, there was a signal in here, if you know how to read it, that said it was going down, but it really didn't show up until right there, and that's where it passed that fractal. So those are some interesting concepts, and if you've been on a smaller time frame, you would have seen other fractals that it had passed, and you just learn how to read those, and that's very simple. So that's the first thing, learning how to read the impulsive and corrective moves and determining when the market is coming to an end. Okay, now I'm also going to share with you how to determine what the direction or the trend of the market is. Now there's all different ways to do this. We see higher highs in this case, or lower highs. That tells us the direction it's going. But the thing that happens is many times by the time you see these, you've missed a lot of this trade right in here. And you may catch this one, which is a good one, but why not see some of these other moves up here? Very simple. You look at our indicators. right there. See where that crossed the zero line? That's the beginning of a type of a trend going short. Notice when it got back long. That's a trend going long or retracement, because this is a corrective move right here. This went back above. When this goes below and it's impulsing, see how nice that moves? Okay, see how this started going short and this was already below? A nice move. This starts up here. So the part that many people miss or get frustrated on is they take trades right up in here. They take a trade right here and wonder why it comes back against them. Well, notice that's exactly what it's going to do. It tells you that's what it's going to do. But look at all the patterns. Go back in history and you can see that is what is going to take place. So the trend, how do you find the trend? The main trend would be when this indicator is below the zero line. And when it's below and goes back above, that's just a retracement. Now I can show you what you're looking for here. See when it's had that convergence and divergence we talked about right here. This happens to be convergence. These 2 points are converging. The momentum is going back to the zero line and the price is still going down. And then it changes. That says that potentially it's probably just going to go up and back down, just like it shows here. This went quite a ways up. Many times it doesn't go quite that far, but then it turns and then it comes back down and forms another move. So there's the way you can tell the trend is which side of this zero line is on. Now let me show you another powerful thing. Let's go to a different currency pair. Do you see impulsive, corrective, impulsive? And then it goes back up. It didn't show on this 4-hour the divergence. It's still just moving up and down. So that's not always 100%, but when you do see it, it is very powerful. When this indicator is below the zero line, we call it the male, and this is found in your free Jumpstart material that you all have access to. You can find that by going to our page at forexstrategiesecrets.com, register, and then you'll have access to called Jumpstart, and it will have this indicator in there. When it's below the zero line, that's one way of determining the trend. A stronger trend is when this is below the zero line and this is below the zero line, and or if it's red. See right here, this crossed and this turned red, so that's a strong indication that maybe you missed that part right there, but we found this part over here after we waited, and then it became strong again right here. Now I'm going to do something right here. I want to mark this 4-hour bar right here. I'm going to move this anchor right below that. Now, you may not have missed that had you been looking at a 1-hour chart. What did the 1-hour chart showed you? It showed you the back over here. You possibly could be looking and trading in that direction. Now, this was a news announcement, so it happened very quickly, but that still can be seen on a 1-hour or a 4-hour chart. Okay, the concept is look at the big picture to find the impulsive and corrective moves and learn how to read them. If it's red and below, that's a big impulsive move. Small corrective move. Right here, it started moving short right here. Notice, here is that convergence and divergence that I talked about. Right there. I'm going to draw a vertical line as to where that actually confirmed. Right there. It had been going up, higher highs. Momentum had been going lower, and when it changed colors and this went below right there, it was telling you that's when the market was going to change. Had a high probability of changing, and then you get, this is actually an impulsive move, but if you don't see it based on this indicator, you wait until over here, and then you see the big impulsive move. Impulsive, corrective, impulsive. And right in here is the part that you sometimes have to be aware of. What side of the zero line is this on and which color? That might tell you that that's a beginning impulsive move, but the stronger impulsive move is over here. we're going to talk about a zone trade, for example. Now, as long as this is the same color going down, and this is the same color going down, that could be zone trades as it continues. It changed right here, so it started in a zone when it started back again. But at this particular point, they were both the same color. So that's a strong zone clear down to there. So as long as they're the same color, then you're going short. Now, here's how you can get a lot of experience in a short period of time. Once to do this to start with, so you can say, okay, I know which way I'm trading. So you go to the 4 hour, maybe you may want to consider doing it even on a day. Then let's go to the 1 hour, and that's the one that we're going to start looking at and say, okay, now the 1 hour, look, it had zones also. There was a zone, it went out of the zone right there, but that's basically a zone. And then right here was the zone on the 1 hour. Okay, so we're seeing, now that's a zone. So we know that between these two outside lines, that's what the 4 hour chart told us. So we can do one of two things. We can go over and trade it on the 1 hour, or we can go down to even the 15-minute. Now we've marked it on the 1 hour, and I'm going to mark this over here as the, in between each of these lines, this is a dead area right here that nothing happened, and we can simulate trade. That's what we call it, simulation trading. So I'm going to move this anchor over here to the side of the page. Then I'm going to move this over right there. Now, we don't see what the market's going to be, what it's doing at this point. So we can say, okay, well, I'm looking for short trades. I know the 4 hour was short, and just so that you can get used to it, then hit the F12 key. Okay, there's red, red. So just take a short trade there and practice this like I'm doing it, then practice it in real life by demo trade it. When you see the setup, take a trade. Wait until it changes. Now we're going down until it changes. Is all I'm going to look for here. It can, when it changes colors here, would be 1 point. Or when this crosses back above the 0 line would be another point. Or when this changes colors is another point. So those could be exit signals. So it's blue right now, so we can say, well, maybe I want to get out, maybe I want to stay in. Now let's just stay in and see what happens. And it took off again. Now, as long as it's in that zone, but now I'm really looking forward to when it changes colors up here. Okay, right there. That's my exit signal. That's the sign to get out. Someplace right in there. So see, that was a nice little move. 94. Now, so what we're doing here is we're learning how to spot the direction, momentum of that trade. Right here was the last spot that was in the zone trade, but we didn't know that ahead of time. We just knew that we were looking for this change right here. Now we keep on going, and we looked at this. We know this is sideways movement, and guess what? There was the next signal that we marked. What did we see right there? You can see that. You can tell the colors changed right there, and then you say, okay, I'm going to take another trade. And we're going to take it, we won't take it at the beginning. We'll come down just a little bit and see. We're sure that we probably get a signal there. Now, what are we looking for again? Let's wait until it changes blue again. When it does, that's our exit signal right there. That's our exit signal. So we put a line on this one. Let's say we exited right up in there someplace. So how much did that net us? Okay, that was about 120 some odd pips move. Okay, what would be another exit signal? When this changed colors. But when they both change colors, and then for sure that says that move is probably going to be over. Looking at the impulsive and corrective moves. Now, we've looked on this 1 hour right here, and then went sideways. 1 hour right here, and then we looked at it using the F12 key. I'm going to move across until we hit that last line on the 4 hour, but we know we're trading only short. See, and it kept on going. Okay, there's the first signal that may give us heads up to take another little short trade. But what does it have to have? Okay, right there. Let's take a trade on this one, going short now. Not at the beginning, we're coming down a little bit. And let's see if that holds true. See, it came back up and basically closed us out if we'd taken the heads up when it first changed colors by itself, when they both changed colors right at about that same spot. So basically you broke even or lost a little bit on that one. And then the 4 hour goes up. Now let's see what the 4 hour was doing. Maybe that was the last bar on the 4 hour that we were going to see. So we go to the 4 hour. Okay, that was the last bar on the 4 hour. And we didn't know that at the time, but we weren't taking any, after this came down and back up, we were out, but we didn't take any trades here because we knew that we were trading short. Except, let's look at the 4 hour now and see what it's telling us. Is it telling us that it's time to trade long, or is it just in a rest period and this is an area that you won't get any signals based on these time frames? So I'm going to use another line right here, and I'm going to change the color of that vertical line so that you can see that we can mark it. Now this is only a 1 hour chart where we're seeing it. Let's see what the 4 hour chart told us. The 4 hour chart didn't tell us anything up there. It still said it was mixed. It was red and blue, so it's indecisive. Right here, then it says going long, but this is a corrective move, so notice that it just kind of went sideways. So that's the concept. That's how you get a lot of experience in a short period of time. You just learn those concepts, learning, oh, this is the direction. Oh, this is how I get into that trade. This is how I manage it. Now, I've used the 4 hour and 1 hour. You can also use the 1 hour, and I suggest the 15-minute would be good examples. So try that in your trading. When you go to the jump start, we talked about, that teaches you, there's videos on simulated trading. It's a little bit different than I shared with you, but it shows you how to do the simulated trading. Once you learn the indicators, then you can use this concept on any course material that you have, as far as learning how to trade that course material faster. Now, the one thing that we'll want to point out to you is on the 4 hours, a larger time frame, and in this case, we're using the 1 hour as a smaller time frame. When you see something on a smaller time frame, give you a signal. We call it salting your trade. Search all larger time frames. And so you go back up and look at your 4 hour, if those are the two that you're trading. If you're on the 15-minute, you might search the 1 hour and 4 hour. That's salting your trade. Then, if you see something on a larger time frame, then you search the smaller time frames to see that everything's lined up. And so you're not just relying on one, you're relying on multiples. You can find signals that happen on the smaller time frames, but the larger time frames are not ready. When that happens, you're usually in this type of a move, in the sideways moves, or changing directions. So you want them all to line up. And then that's what that does, is helps you to create a watch list. So if you have a watch list, then you'll be able to be waiting for things when they set up properly. How to get 2 years experience in 45 days. That's what we want to talk about, is doing simulated trading. Do it daily and do it for 15, 20, 30 minutes every day. You'll get good at it. Then the other thing that we found is at the beginning of the week, you've been off, you've rested, and all of a sudden you're not in tune with the market anymore. So simulate trade for a few minutes, 15 minutes before you start trading your week, and that'll get you back in the groove of looking at things. So simulated trading can help you learn how to trade, but get you in the mood to trade, your mindset properly. Attend as many PIP club sessions as you can that you can fit into your schedule. A PIP club, you can find that link on our website, and it says PIP club members and visitors are welcome. So click on that and join as many of those you can. That will help you to learn what's going on also. You can ask questions there, and you can share information that you see with others. You can type in the information. So that's how you get a lot of experience quickly. You interact, you're acting with others and with a system, and you're all talking the same language. Now, we have a course called the Nth Degree, and it has everything that you'll need to become a successful full-time trader. I was showing you examples of the trades on the Nth Degree. That's the system. That's what you'll be seeing and using if you elect to get involved with the Nth Degree. So what else do we have? Now, over the years, we've had a lot of questions. And so we've taken these questions. This is basically going into more depth in the course material and the 21 Trading Lab webinars that we had. So these are like 20 to 30 minutes long and answers the questions that are over the same material that's in the course material to help you further understand it. And we have some courses that show you how to get up to speed quickly, accelerate your trading. They were coaching webinars we included. We also include a Fibonacci course. Now, we didn't talk about this, but Fibonacci are used to find extensions and retracements. When a move goes in a direction and it retraces, the Fibonacci's will give points as to how far it generally is going to retrace. An extension is how far is it going to go once it comes out of that retracement. And that's where we can use the Fibonacci's to give you guidelines and suggestions as to where you may want to place your stops and take profits and how big that trade may be. If you purchased all this material separately, it would be $1,297. But because of the webinar price, if you see this in the video, you can get this material for $697. That's a fantastic buy for what we're sharing with you. Having a course material and having access to a live individual to answer questions 3 days a week. That is a value that's far beyond the $697. So just be aware that you can come and see what it's all about. You can research it out before you even get involved with it, see if it's really what you want to do. And that way you don't have to say, well, it wasn't what I thought it was going to be. You can then get involved and be assured that's what you're getting, what you're thinking you're getting. Okay, here's the link. I'm going to come back to this link in just a moment, but type this into a browser and you'll be able to order from this link. Now right here, you can find our website where you can ask us questions. Type in the Forex Strategies and Secrets in an email and send us an email, and then you can we'll respond to that. And or if you want to talk to us, call us or give your phone number and we'll call you. So I'm going to go back and leave this section right here.